All right, guys, let's go ahead and get started with our weekly webinar for the week of January, either the 14th or the 15th, depending on where you are. Thank you guys for taking the time out of your Sunday or Monday to watch this weekly outlook. If you're watching the replay, also thank you for taking the time out of your day to watch this. Guys, if this is your first time hopping on, I want to welcome you guys. My name is David Schinkel. I'm the CEO and founder of Positive Traders. Positive Traders has been around for almost 2 years now. I've been doing this Sunday weekly outlook for free just about every single Sunday for you guys to give you guys my outlook and personal bias on the markets for the upcoming week. As usual, my disclaimer is, guys, this is just my opinion, my bias. You guys have seen, if you've seen my portfolio, my track record from my FX book, I have about a 75% win rate. So losses are imminent in the markets. My bias is not always going to be 100% right. So please take my bias with a grain of salt. Don't be placing any entries or trades just solely off my bias. You know, I definitely urge you guys to be doing your own analysis, your own bias in the markets, and taking the trades on your own. Never risk money that you are not willing to lose. That's a simple, very clear rule number one when it comes to investing in any market. Guys, today, as far as announcements go, if you guys are a premium member, we are releasing I'm releasing the much anticipated new and updated training videos. If you guys have not gone through our about 7 hours of older training videos, I urge you to log into our website and go through your back office. Under the training section, there is the older trainings for you to go through. Other than that, we're going to be doing our regular private webinars for our premium members tomorrow, the next day after that, and the day after that. So we do that 4 times a week. Let's go ahead and jump into things, guys. If you guys are new, we are going to be looking at all of these pairs over here to the right side. First and foremost, though, let's look at the economic calendar. Let's see what we can expect as far as fundamentals in the markets for this week. So starting off the week, it's pretty light. We have some CPI for the pound tomorrow. The following day, we have Chairman Jordan of the Swiss bank speaking in the morning on Wednesday. The time that you guys see here may not correspond to the time where you guys are at. I am currently on the east coast of Australia, so this is going to be AEST time. If you guys are using Forex Factory as your calendar, up here in the top right, if you see where my cursor is, you can click on that little clock and you can change it to your time zone. So you can see all of these events in your time. Some key risk events to touch on for this week. Thursday, we have the Bank of Canada with their interest rate decision. It looks like they are looking at raising interest rates from 1% to 1.25%. So we should see some volatility come Thursday and probably before Thursday as well, with the markets probably pricing in this rate hike. So we'll look to see where this happens. We're going to be also looking at USD CAD. I think we're going to be looking at some more downside for USD CAD, but we'll talk about my technical bias on the markets in just a moment. Other than that, you know, just some normal high impact news. We have a Bank of Canada press conference following that rate statement on Thursday. We have some Australian dollar news Thursday as well, some GDP quarter over year reading. I don't know if that's a typo, Q over Y. I've never actually seen that before. Usually it's quarter over quarter, year over year. So I'll look a little bit deeper into that. For you guys that are on the premium webinars, we'll be discussing that as it gets closer on our daily live webinars for you guys. Other than that, you know, we just have a little bit of scattered high impact news throughout the week. I'd say our main key risk event to be watching is the CAD rate statement on Thursday. So mark that on your guys' calendars. You guys know I travel with a little calendar planner that I write down the key risk events. Usually I write down all of the high risk events. Lately, I've just been writing the key risk events, but our key risk event, again, is going to be that rate statement on Thursday. But do be on the outlook anytime you go to place a trade. If you're placing a trade on your own, make sure that there's no high impact news for that pair, you know, happening, you know, 10 minutes, 30 minutes, an hour, even a couple hours after you're going to place that trade. Also, just a quick little announcement. I did post this in Slack for the premium members, but this week I will be announcing exactly how cryptocurrency is going to be integrated into Positive Traders. You guys know I held a webinar on December 28th regarding Tron and Stellar. At the time of that webinar, I told you guys I was investing in both of those coins. I showed you guys my investment specifically with Tron, showed you guys I put 6,000 USD into Tron at 3 cents, and I put about $1,000 into Stellar at 21 cents. So both of those had some pretty big moves to the upside. We saw Tron go from 3 cents to 30 cents. It's right back around the 10-cent area right now. I am holding that long term, as well as Stellar. I actually have sold off my Stellar and bought more Tron, but Stellar had gone from 21 cents at the time of the webinar up to almost $1, all in USD pricing. So pretty much the way crypto is going to be involved with positive traders. I know I've had a lot of people asking me. As far as I see it, I am not really interested in day trading cryptocurrency like I do Forex. I'm really looking at, doing good research behind companies, getting good, researching good bias on coins, getting in at a good price and holding them for multiple months or multiple years. Simple as that. A good way to diversify your investment portfolio. And any profits, as I did explain before, any profits I do make in the crypto markets, because they are very volatile, and I'm not looking at day trading that. Any profits made in the crypto markets, I recommend putting that back into Forex, because that's going to be, a little bit less volatile. I've obviously been studying and trading Forex for many years, and that is going to always be my bread and butter, my go-to. Crypto investments make up 10 to 15% of my entire investment portfolio. So at the end of the day, I always fall back on Forex. My attention is always more on Forex than anything else. But us as professional traders, our job is to seek out volatility. And right now there's a lot of volatility in the crypto markets, which is hard to ignore. So I recommend, guys, if you aren't in crypto, you don't have to be, but, maybe do some research on it. There's literally tens of thousands of hours on it on YouTube for free. You can go and learn about crypto on your own completely for free. It just takes, your time and willingness to learn. But also we're going to be doing a couple different webinars this week, but I left those announcements in Slack. So if you are a premium member watching this and you haven't checked Slack for the couple updates for the week, highly recommend go and read that weekly update. Good information. Yes, definitely, Reginald. So let's go ahead and talk about my technical bias in the markets for the week. Starting off with the dollar index. Looks like we are going to have a bearish week for the dollar. I want to outline something. Let me grab my marker out for you guys, and we can see where price is at right now. Right here, where this fib or retracement ends, when I went ahead and fibbed out this high, which is actually the 2017 high. This down here is the 2017 low, which we have seen broken as of last week. So not by a whole lot, but we can actually see that if this is the low, we can obviously see where our current price is at, current ask price on the dollar index is at. It is below last year's lows. We can also notice last week's candle is very bearish. So I think that we are going to see some more significant weakening in the dollar this week. It didn't quite move up to our sell zone last week, so I just want to quickly recap. If you guys were on last Sunday's weekly outlook, it did follow the general bias of what we were looking for. So if you guys remember the start of last week, I told you guys that if we did break last week's lows, we were probably going to see a pretty big decline in the dollar, but I was more biased to a pullback, probably somewhere around this area, retesting this head and shoulders that the dollar index created. And we didn't quite get up to our sell zone. So us personally in the premium group, we did not take a sell on the dollar last week, which would translate into a buy on EURUSD because it did not get up to our sell zone. But seeing how low the dollar index is right now, a huge gap over the weekend, guys. Check that out also. There is some significant negative sentiment towards the dollar right now. And I think we're going to ride that wave. We're going to continue to see the sentiment for the dollar weekend as the week goes on. Of course, we're going to play it by ear. We're going to be watching the price action, but I want to show you guys this scaled out chart of the dollar index, and you guys can see there's really nothing holding from a technical standpoint. There's really not a whole lot holding the dollar index right now. One thing I'd like to do now that we've actually broke those lows is I'd actually like to take this from basically the start of this rally all the way up to these highs. And we can actually see that if you guys notice, this is our 50% retracement level where we had found last year's lows at. we have now broken that 50% retracement level. So we may find our next targets on the dollar all the way to the high 80 point basis on the dollar index. So we'll look to see what happens, but I will let you guys know right now, especially if you guys are in the premium group, looking at what I might be giving out some trade calls on and trading on the trade copier for this week is some dollar weakness on some weakness on the dollar. So let's continue going through the markets, guys. If you guys have been watching and following along with these free weekly webinars for the past couple of weeks, I've told you guys that my bias is my medium-term, long-term bias is still 1350 on gold. We're definitely moving up to that area. Very similar thing with gold, though. We did not get to our buy zone with gold like we wanted to get to our sell zone with the dollar. So sometimes the markets don't always move exactly how we want them, so we aren't able to capitalize on these movements, even though they move in the favor of our bias. So if you guys remember last week, I was talking about probably consolidating in this area for a little bit, or even seeing a little bit of a descending channel and then moving up. Very similar how we had this ascending channel and then a break to the downside. I was hoping to see something like that on gold to give us a good entry somewhere around the 1300 level up to the 1350. Obviously, we saw the dollar weaken a lot quicker, a lot faster, a lot quicker than we were expecting, but I am going to stand with my bias, stick with my bias of gold at some point, probably over the coming week or two, maybe 3 weeks if it takes that long to see gold hit 1350. We'll leave it at that. Euro USD, very similar to, we obviously looks the opposite of the dollar index. We broke on the dollar index. We just talked about how we broke last year's lows. So on the Euro USD, you guys should know this. I've gone over this many, many times. Even if you're in the free group, I've gone over this many, many times. You should know this like the back of your hand. Now, if this is your very first webinar and you don't know this, or you're just very new to Forex, kind of soaking all this in and taking some notes, I highly recommend adding this to your trading journal. This is something you should definitely live by in the markets, especially if you're trading USD pairs, USD currency. That the dollar index has about, I'd say almost like a 99% negative correlation to what Euro USD does. So you'll notice that the dollar index and Euro USD are literally an inverted mirror image of each other. So we see the dollar index dropping right now, so we're seeing Euro USD rising. Almost every single daily candle is going to look the exact opposite of what the dollar index daily candle looks like. So using the dollar index, you can really gauge the correlations throughout the markets, especially on Euro USD. So I told you guys, I think that we could see some significant weakening this week on the dollar index. So we could see this week some significant strengthening on Euro USD. We saw a very, very big bullish candle to finish off the week for Euro USD. We also saw last year's highs broken. Really, there's not a whole lot of resistance on Euro USD. We can do something very similar to like what we did on the dollar index. We can take this high of 2014, which I believe that's high. We'll take a look very quickly. I believe that's a high of 2014. Yes, the high of 2014 all the way to the low of 2017. If you guys don't notice, if you guys don't understand what's happening in the markets, we have not seen where price is at right now. Euro USD, the euro is getting very strong. We see Euro USD trading at 1.2205, which is at, last time we saw price at this level was December of 2014. So it's been over 3 years since we've seen price at this level. So pretty interesting to see what the markets are doing, and we could see this continue to go. I also want to give you guys an idea of why we're seeing Euro USD find some strength right now. Very quickly, I want to show you guys last week. This is a good little educational tidbit. We went over this on the daily webinars if you guys are in the premium group as well last week, but I do just want to throw this information out for you free members as well. Last Thursday, even though this was medium impact, I think that this should have been a red folder. Honestly, it was actually a very high impact. And many of you guys remember last week. Let's go ahead and just very quickly drop this onto the 1 hour. I just want to show you guys. Some of you guys may remember last week, we saw Euro USD down in this area just spike up completely. Some of you guys may not know why this happened and why this bull trend overall happened. This is why. Or at least I believe that this is why. It just really makes sense from a fundamental standpoint as well. the European Central Bank released a monetary policy basically giving their economic projection and outlook on the euro. The way you can actually read this, if you guys are interested in learning the fundamentals, is on Forex Factor. You can actually click right here on latest release. It's going to open up the ECB's website. You would go ahead and click on 2018 right here, and you can actually find that monetary policy meeting statement from the 11th. So you can click right here on the English version. If you speak a different language, just copy and paste this, or you can probably use Google Translate and read this. It's a little bit to read. Honestly though, guys, if you're serious about Forex, I recommend reading this. Understanding what happens to the euro is very fundamental to pretty much understanding what happens, especially if you're trading Euro USD, which is the most popular pair to trade. Literally only took me about 10-15 minutes to read through this. But if you do read this, the overall bias and the overall stance and outlook for the euro was strength in the euro. So you guys should know and understand that us as retail traders, you, your friend, the group of traders you're a part of, we do not move the markets. Even with, I don't really know, I'd have to look at the statistics of how many retail traders there are in the world. I'd probably say there's a couple million, maybe even more than that, maybe a couple tens of millions of retail traders out there in the world. All of the retail traders combined don't even move the Forex markets. You guys know that the Forex market is a $7 trillion a day market, meaning you have to have literally hundreds of billions of dollars to even have an effect on the market. Obviously, even all the retail traders combined don't even have probably don't even have $100 billion. So we don't move the markets. The people that move the market, the reason I'm saying all this is the people that move the markets is the banks, institutions, hedge funds. And those are the people that are actually taking the time to read these statements and understand what the euro is doing. They read something like this and they find confidence in the euro. So that creates buying pressure, and that creates bulls and buyers in the market. So we see people take their money out of other currencies and invest in the euro, which causes Euro USD to rise. So obviously there are technicals that come into play, right? We can look at you may have been able to catch this move. We had a little bit of a bullish engulfing candle, a little bit of a morning star in this area. So there are technicals in play, but this is also a very fundamental move currently to the upside. So make sure you guys understand that there's a lot more than just the technicals. I'd say the technicals make up a large majority of the markets, and obviously most of the trades that I personally place are based off of technicals, but I definitely don't ignore the fundamentals, right? I'm not one of those people that I don't read the news or anything. I really like to learn as much as I can. Even though I've been trading for many years, I still consider myself a student to the game. If you aren't learning, you aren't growing. So even though I'm consistently profitable, I'm able to create an income, a profitable income that allows me to do things like travel the world, be 7,000 miles away from home right now, spending a couple months out here in Australia just because I want to. It doesn't mean that I'm not willing to learn and putting in the time each and every week to learn something new. So having things like that monetary policy to be able to go through and read, it's a good refresher. It's always good to go back to the basics and refresh yourself. So again, Euro USD, I don't know if we're going to see Euro USD just continue to fly up. We may actually see a retest of this break. So we may actually see Euro USD drop 100, maybe even a couple hundred pips at the start of this week. But overall, I'd say over the coming weeks, we're probably going to see some strengthening of Euro USD. Let's look at USD Swiss franc. So inversely, another big correlation. Most of you guys probably know this because if you keep up with me, I preach this all the time, especially if you're in the premium group. But if you are in the free group, if this is your first time watching this, write this down as well. Euro USD and USD Swiss franc have a very negative correlation. One little piece of value I went and threw into, we went over in the premium webinar, which I'll just take 2 seconds and go over this. A lot of you guys may not know that there is such a thing right here. There's actually a correlation chart that you can find. There's a couple websites that have this, but I prefer the one on MyFXBook. You could just type into Google MyFXBook correlation. It's going to pull up the link to this. This is a correlation chart. It shows you all of the correlations on different time frames that you choose between pairs. And just to prove, put the money where my mouth is, and not just, just so you guys can see, I'm not just throwing BS at you guys, that there's actually numbers and statistics to back up what I say. We can look at Euro USD right here. Obviously, you guys can see the middle of my screen where my cursor is moving, and we can scroll down. This is going to show the correlation between Euro USD, and let's find USD Swiss franc. USD Swiss franc, USDCHF right here. So from a daily time frame perspective, we see that Euro USD and USD Swiss franc have a negative 95.3% negative correlation. So this means usually when we see 95% of the time on the daily time frame, when we see Euro USD move up, we're going to see USD Swiss franc move down. So make sure that if you guys are trading these pairs that we're going over, you guys understand these correlations. You know, it's not obviously 100% of the time. There's going to be that small percentage of the time. Both might be a seller, both might be a buy, but overall we see Euro USD and USD Swiss franc have a negative correlation to each other. So what does that mean? We tie everything together. Euro USD, we're probably looking at some strengthening on Euro USD because we're looking at a weaker dollar. So we're probably looking at seeing USD Swiss franc continue to fall if we see Euro USD move higher. It again didn't quite get up to our sell zone. So if you guys remember last week, our overall analysis was correct last week. We actually saw this happen at the beginning of last week. I was talking about price probably moving up when it was down around here, probably moving up towards this trend line. I would have liked to get in a sell a little bit closer to that trend line, and another rejection off this trend line would have been nice. Unfortunately, that didn't happen. We saw it fall a lot quicker than expected. But, you know, maybe wait for a little bit of a retest on this trend line, a bigger trend line, and then look for some downside. That's what I'm going to be watching for. I think the 61.8% retracement level is a good next level of support. Let's look at pound dollar. Pound dollar absolutely flew through the roof. I was hoping to see a little bit of consolidation in this area, but if you guys were in the premium group, we marked off this consolidation that we had seen for about a week and a half. And I told you guys, whichever way we see the markets break out of this consolidation, it's probably going to make a significant push in either direction. So we saw a push out this direction, and the daily candle obviously closed much higher. We're seeing a lot of strengthening in the pound right now, a lot of weakening in the dollar, which creates a catalyst for a stronger pound dollar. So we're seeing this a major uptrend respected on pound dollar. I'm not too interested in trading pound dollar right now. I think we're going to get a little bit better risk to reward on Euro USD, even USD Swiss franc possibly. But we'll just kind of skip over this pair right now. But I think that this uptrend could continue, especially if we see Euro USD move higher and the dollar continue to weaken. Graham, hi from Ireland. Nice to see you as well. Greetings from out here in Australia. Let's look at Summer. Glad you are getting some value off of here. Also, guys, this is recorded. So if there's anything you want to, if I'm going too fast, if you need to go through this again, you can search, just type in on YouTube, Positive Traders. You'll see all the weekly webinars I have done for free in the past. There's a lot of juicy content and info, even on the past ones. Even though I'm going over old analysis, the principles that I talk about, principles that I used to trade with are always the same. I want to look at pound yen very quickly. This could actually yield some very nice trading opportunities. This is a correlation I want you guys to write down as well. Generally speaking, if we see a stronger dollar, we see pound yen go up. If we see a weaker dollar, we usually see pound yen go down. Generally because if we see a weaker dollar, we see stronger gold. If we see a stronger dollar, we see weaker gold. And generally gold and pound yen have a negative correlation to each other. Not so much the past day. We obviously have seen gold go up like we just talked about. And we also saw on Friday pound yen spike up from pound strength. Not super interested in trading pound yen right now. We might actually see some downside this week. I don't really like this this is kind of like a giant morning star. If you guys are familiar with your candlestick cheat sheet, if you guys have gone through, baby pips or some equivalent, and you guys understand price action and the patterns that the candles make up. If you don't know that, I would highly recommend that. Going through that, you can just type in on Google Japanese candlestick cheat sheet, and there's a couple different websites with them on there. But this is technically a morning star, which is a bullish formation. So we might see some upside, but we also are retesting kind of the underside of this channel that we had on pound yen. So I'm not super keen on taking a buy right now. I think we might see a little bit of consolidation, even some downside on pound yen. So really not really liking the pound pairs as much. We're also going to look at USD CAD, guys. I think USD CAD is a good trade. So stick with me on that. Dollar yen. I want to look at dollar yen on the weekly time frame and show you guys what I'm thinking. So From a weekly standpoint, guys, last week we saw a huge break of this consolidation. So for 5 weeks and 6 beginning last week, we saw some major weekly consolidation, also some good resistance at this trend line on dollar yen. And last week we finally saw a break to the downside. I explained this on one of the premium webinars, I believe on Thursday, our last premium webinar of the week. I explained on dollar yen that, or just all across the board in Forex, when you see that consolidation, when you see a consistent consolidation and it continue to consolidate even tinier and tinier and tinier, it's kind of like a spring, right? If you were to take like a spring and put it in between your hands, right, or in between your fingers, and you close it and close it, the more you close it, the more resistance on that spring you get. So when it finally springs out and finally pops, it's going to be a lot stronger. It's going to be a lot stronger move than if your fingers were farther apart, right? The closer and closer, the more consolidation it has, the more pop it has in one direction. And that's usually what you see in the market. So seeing the dollar yen fall so hard last week, I don't think was a big surprise, especially if you look at it on the weekly. You can kind of understand why that happened, because the 5 weeks leading up to that, we really saw no movement, just a lot of consolidation. It was in a pretty big range. You can even see it on the daily, pretty big range where we played in, and then we finally saw some downside. We're also breaking a weekly low, which we're actually seeing some pretty significant downside already this week on the dollar. Some of you guys have asked me too. I've been getting some messages. Do I look for trades right on Sunday? Do I look at jumping in a trade right on Sundays, right when the market opens? Generally, no. Unless I see a trade that is just screaming, good risk to reward and screaming like it's going to be a good trade, I generally do not place trades on Sunday. I kind of let the markets from the weekend, kind of let that liquidity and that volatility from the weekend kind of settle in, kind of see what the price action, how the daily candle closes Sunday. Personally, my favorite days to trade is Monday through Thursday. Sundays, Fridays, not my favorite days to trade. Have I placed trades on Sundays and Fridays before? Yes, but I think you can get better risk to reward. The markets are a little bit better in terms of moving and price action between Mondays and Thursdays. Anyways, my bias and my outlook on dollar yen for this week, obviously, I think we're going to see some downside. We see a very strong bearish candle to last week. We see almost no wick on the downside also, showing a very strong presence of sellers still in the market. Do I think we could get a little bit of a retracement? Absolutely. I think that we could still retrace a little bit, just like I think we might get a little bit of a retracement on USD Swiss franc before going lower, just like I think we might get a little bit of a retracement on Euro USD before moving higher. We could get a little bit of a retracement on USDJPY before going lower. But I am not interested in buying this retracement because it is going against the trend. You guys have probably heard the term, the trend is your friend, and that is a very good saying. Overall, this trend on the daily, we can see a series of lower highs being created, some nice resistance, nice little triple top back in this area. And I think my next target on USDJPY is going to be somewhere right around the 110 area. So look for some downside this week on dollar yen. I'll leave it at that. Summer said UJ is a fave. Absolutely, Summer. I think the price action on this pair, both this and Euro USD, are exceedingly nice to trade this week. Especially if you guys are in the premium groups. Those are probably two pairs I'm quite keen on looking at placing a trade on. AUDUSD and NZDUSD. Analysis on this pair is actually following through pretty nicely. If you guys followed last week's analysis from our Sunday weekly outlook, we talked about, even though we had seen a little bit of an evening start to finish off last week, probably seeing some upside on AUDUSD towards this trend line, and that's what we saw. We have seen both the Australian dollar and the New Zealand dollar, which we're going to look at in just a moment, find a lot of strength. I personally have actually noticed that also. I've wired over from my US bank account to an Australian bank account. I've wired over $5,000 two different times. I think the first time I wired over $5,000 when price was down here. When I first got to Australia, I got something like 6,500 Australian dollars. And then when I did my second wire somewhere up around here and I felt that hit, instead of getting that much, I think I got a little bit closer to 6,000, like $6,200 or something. So I am also experiencing that strength in the Australian dollar. So it's kind of cool to see that, in real time, obviously traveling and seeing the exchange rates, from a personal perspective, not just seeing it on the charts. So we're seeing a lot of strengthening in both of these markets right now. And what do I think could happen? My personal outlook. Well, if you look at the Australian dollar, we have a major descending trend line of resistance, which we're actually breaking through right now. If you guys are in the premium group, even in the free group, I told you guys that we may look at taking a sell around this trend line. But I told you guys and have told you guys multiple times that the only way we would ever look at selling at this area, because that's obviously very against the trend, we would need to see a very strong reversal pattern. We need to see a very strong daily candle close creating a reversal pattern. Obviously, we can see just based on Friday's candle close that we are really not getting that. We're still quite bullish on both of these pairs. So I would probably expect to see some more bullish movement. We may actually see our next targets for AUDUSD coming back up to retest these previous highs, which I believe that may actually be the 2017 highs. Let's just very quickly go back. Yes, that is our 2017 highs. So we may be looking to retest our 2017 highs. We'll keep it as, as simple as that. If we get some sort of retest off of this trend line on maybe the 4-hour or the daily, we may actually look at taking a buy with as long as we get a good risk to reward. That's really what it breaks down to at the end of the day, guys. I'm actually going to show you guys something at the end of this too. I have a huge knowledge and value bomb to drop on you guys at the very end of this. So please, guys, like out of everything I've gone over, I think the most valuable thing is a picture I'm going to show you guys at the end of this. So please, if there's one thing you do for me on this webinar, it's just you stay until the very end. I'm about to do USD CAD in just a moment. Please don't leave right when I do a USD CAD. You're really going to, do yourself a disfavor. So stick with me, guys, okay? NZDUSD, I'm really not too interested in NZDUSD, even though I probably would be bullish on AUDUSD because we're at a pretty major resistance level. I want to show you this weekly resistance that we have on the New Zealand dollar. We are finding, guys, it should be pretty clear. Most of you guys can probably see this just looking at it, but we have this major area. Although we broke out right here, we have this major area where we have found a lot of resistance on the New Zealand dollar. This is also one of the catalysts for me looking at a potential sell on AUDUSD and NZDUSD because they tend to have a positive correlation. But we'll look to see what happens. It is very possible that especially with this very significant strength of the dollar, or very significant weakening of the dollar that we're seeing, we may just see price skyrocket through here. But I'd like to do a little bit more analysis. We're also breaking through the 61.8% retracement of this previous swing. So there is a lot of potential to the upside, but there's also some major resistance. Graham is saying Tron hodl. Guys, I hold 170,000 Tron right now. I am holding. My biggest recommendation with Tron, guys, don't look at it. Don't refresh CoinMarketCap every single day. You're gonna go crazy. We'll maybe talk about that in a second. But I guess I'll just talk about that very quickly for like 15 seconds. Guys, I'll just put this on the table and say like this. Any cryptocurrencies I mentioned about, any cryptocurrencies I tell you guys I invest in, I'm not watching it every single day. I'm looking at just holding it and let it do its thing. I'm going to watch it and see how it goes over the next couple years, couple months, watch how it goes. So as simple as that. I already see some people leaving. So you guys, those people leaving are missing out on some huge value. Finally, let's look at USD CAD. USD CAD, I think we're going to see some more bearish moves on USD CAD. We saw this, what I really like is that we saw a breakout of this uptrend, right? We're seeing a breakout. Watch for a retest around this area and then look to go short. Between EURUSD, dollar yen, and USD CAD, these three pairs are on my watch list above the rest of the pairs that we just looked at. I think especially with the rate hike coming for the Canadian dollar from the Bank of Canada this week, I think that is going to find some appreciation. I think we're going to see, you guys know the classic rumor. If you don't know, you should look it up. It's called buy the rumor, sell the news. So I think that the markets are also going to begin to price in that rate hike before it even happens, which should cause some appreciation. Those of you guys that do not know, I'd write this down. Generally, interest rates going up is good for a currency. Generally, interest rates going down is bad for a currency. So if we're seeing or expecting interest rates to go up for the Canadian dollar, we should see USD CAD go down, because that is the weakening of the US dollar and strengthening of the Canadian dollar. So as simple as that. I look for our lows to be retested and potentially a break. Of course, we're going to see a lot of volatility come Thursday with that rate hike for the Canadian dollar. So be mindful of that rate hike. Okay, guys? So here is my major value bomb. Let me open it and show you guys, okay? If you guys, this is recorded. I'm actually going to post this. This is actually going to be a status on my Facebook status probably today or tomorrow. I'll also go ahead and, I think I posted this in Telegram already, but I really want this to sink in with some of you guys. So let me share this with you guys. All right. Okay, guys, this right here shows the top 69 traders in the world that have lived, right? Not all of them are alive still. Some of them are not around, but it shows you the top 69 millionaires and billionaires that have traded or currently trade Forex. What the number you see in parenthesis is how many years they have averaged this gain. So for instance, if you guys look right here, Scott Ramsey, for instance, okay, it means his average for the past 11 years of his returns is 25.7%, okay? And what I just said, guys, is these are the top traders. So let this sink in for a minute, and I hope this makes sense to you guys of how important compounding your money is. I see all over social media people trying to get, flip their account in one day, flip their account in 1 month, flip their account in even 1 year. Okay, there are a couple people that are exception to the rule that get 100% a year. But if you actually take the average, if you screenshot this right now, guys, and you add up all 69 of these numbers and you divide that number by 69 and you find the average of all of these traders, that average is 31.9%. So let that sink in, guys. The top 69 traders in the world, their yearly average return between all of them is 31.9%. So, and some of these guys have been doing it for 50 years, 10 years, 20 years. So why some of you guys have only been in Forex for 6 months, a year, even 2 years, 3 years? Why are you guys trying to outdo millionaires and billionaires that have dedicated their life to doing this? Let this sink in. You guys have to understand how powerful compounding, long-term compounding. So stop aiming for 100% gains. Stop trying to gain 100,000 pips, 10,000 pips in a month. Pips don't even matter. Percentages is what matters. Focus on a nice, consistent 2, 3, 4, 5% a month and watch what a small account does over a series of 5, 10, 15 years. It is possible to build 6, 7, 8, 9, even 10-figure wealth in the Forex markets as long as you keep low risk, good risk to reward, and you always fall back on compounding. This is the key, guys, okay? Exactly, Summer. This belongs on a vision board. So, guys, you need to stop following people that are claiming. I have a lot of people always message me, how well can you do for me? I've been burnt a lot of times by groups. It's because groups are trying to find, trying to give you or advertise unrealistic long-term results. You have to remember consistency. Is it possible to gain 100%, to flip your account? Is it possible to take 2,000 to 10,000 in a month? Yes, it is possible. Is it consistent? Absolutely not. Can you take 2,000 to 10,000 every single month for the next 5 years of your life, every single month consistently? Absolutely not. Let this quote sink in, guys. The only way you're going to get high returns is if you get high risk. Okay. So I use low risk. I get moderate to low returns, but it's not low in terms of investing. And I let those returns compound and compound and compound. I want to show you guys something too. Some of you guys that were in the premium group, we closed off 2017 with 40% gain, a little bit over 40% gain on our trade copier for the year of 2017. That's what we closed off at. So we'd fall in this tier. We're up there with some of the top traders in the world. So us as a group, us as positive traders, I love where we're going. I don't think anytime I look at anything, you know, I don't think we're behind the ball at all. If anything, we're ahead of the ball. Okay. Even if we would have closed the year with 20% gain, we're still up there with some of the top traders in the world. So you guys know March closes 1 year of officially taking the trade copier off of all of the trade calls I give out in Slack. So I'm hoping to finish off a full 12 months at least 60% for 1 year. So that would actually get us up in this area for one entire year. But for 2017, obviously finished off 40%. But those are still astronomical gains. So, you know, just I'm glad you guys, I hope you guys are getting some value out of this, because, you know, I think some of you guys get into that mindset, oh, well, I need to turn 1,000 to 10,000. No, it's not like that. Turn 10,000 into, or turn 1,000 into, you know, 1,050 1 month, then do 5% the next month, 5% the next month. And is it going to be consistently 5% every single month? Not always, right? You might have a month of 20%, then a month of 10%, then a month of 4%. You might even have a losing month of negative 1%. But overall, at the end of 12 months, if you can average 60% in 12 months, okay, 60 divided by 12, that is 5% each month. So it's about averages, guys, and consistency long-term. So that's it, guys. That's all I've got. I hope you guys have a good, fresh outlook for what I am looking at. Again, guys, don't be placing any trades just solely off of my analysis. Please do your own analysis, your own bias, your own markups before placing a trade. But other than that, if you guys are in the premium group, I will catch you guys tomorrow at 10 p.m. Eastern time on our normal daily live webinar to start the week off. I'm going to be dropping those new and updated training videos. Go through the old ones if you haven't on our website, if you're a premium member. If you guys have any questions too, please reach out to me. Hit me up. Facebook is one of the best ways to get a hold of me. Telegram, Instagram, Slack if you're a premium member. Anyway, email also off of our website. Any way to get a hold of me, I will find some time to reply to you guys at some point. So I appreciate you guys. Thank you guys so much. If you're a free member, I'll see you guys on next week's Sunday Outlook webinar at 8 p.m. Eastern time. Other than that, have a wonderful week, guys. Keep those risks low, keep that consistency going, and have a wonderful weekend, guys. See you guys.